We are going to cover three things here in this video. Number one, and most important, the bears are about to get wiped out within the next couple of weeks. We have a brand new interview, and we're going to give you guys a live commentary because holy shit, I can't even fathom what I'm hearing right now. They're done for. Bottom line. Second thing we're going to cover here in this video is the pricing war in China is officially over. I find this funny that analysts are saying this is bearish for Tesla or bad news. When the price war started, it was bad news for Tesla. There's apparently no win-win here. I don't think that's the case. Third thing we're going to cover is the non-farm payroll report coming out in just a few hours, as well as the unemployment rate, how these numbers could come out, and how that could affect our markets. Now, if this is your first time to the channel and you like to make money, you want to make more of it, if you want to reach financial freedom as quickly as possible, or just stay up to date with everything happening in our markets every single day, this is the place to be. Hit the like button as well. Let's get into all of this juicy information. So we're going to go ahead and start off this video with some live commentary because, oh my God.
In the world of EV deliveries, what's your interpretation and outlook?
So
and they're talking about Tesla deliveries here. I skipped the first 25 seconds because it was the intro.
I don't think too many people care about the long-term earnings power, excuse me, of Tesla.
What are you even saying? Okay.
I think the deliveries, the fact that they were strong, puts upside pressure on the stock in the near term. So I would look.
That's the one thing that we agree, see eye to eye on in this whole entire clip. Just to let you guys know, the one thing.
Look for that in the short term.
I see. Okay, but overall, you were pleased with the deliveries from the company, Andrew?
Yeah, absolutely. I think, again, it's a short-term move in the stock. The long-term, excuse me, doesn't look quite as compelling.
Okay, let's leave it there.
The long term for Tesla does not look as compelling. He literally just said that. What's he smoking? I mean, holy moly. Okay. We'll just keep going. I think you guys already get the gist of this video.
I'll be right back. Doug, your thoughts on what you're seeing from Tesla and the fundamentals there?
Yeah, fundamentally, it's a great business. They've got a great margin, 18% operating margin, 25% return on capital. And that operating margin is like 2 or 3 times what the Detroit companies earn. So,
okay, two things we agree on. Two things.
From that point of view, it's a great business. They have a great balance sheet, but it does feel like you're kind of chasing a hot stock here. It's doubled year to date, and it sells for 75 times forward earnings. So it's tough to really jump in here. It's kind of priced for perfection and not much of a margin of safety to protect you.
Okay, let me push back on that a little bit. Yes, Tesla's trading at about 75 times earnings. But again, I've made this argument before many times. Analysts just can't comprehend this. Tesla is growing in between 40 and 50% this year. Elon hopes to be closer to 50%. What are your other big tech names selling for that are at all-time highs? Apple, Microsoft, they're over 35 times forward earnings. Apple's negative year over year, and Microsoft's close behind. If you value companies, growth companies, using their growth rate, which is the PEG ratio, Tesla is 2 to 3 times cheaper than your big tech names. And I think that's a big reason why the bears are going to get wiped out here. They're disregarding the growth rate of Tesla in trying to say it's undervalued. Comparatively to big tech names, it's one of the cheapest out there besides Amazon. But let's continue on. This gets even juicier.
So in the meantime, dealer inventory of EVs has grown to record levels, but I will say the pace of EV sales growth fell from the first half of the year compared to last year when sales were growing. There's still a big demand for EVs, right? And
they must not be talking about Tesla there, because Tesla is hitting new records and their year-over-year numbers are like double last year's numbers for Q2. But hey, just let them keep going. I have a hard time not correcting bullshit, okay? Maybe that's my problem.
Andrew, when you look at this, you have Ford and GM and people are getting on board. The EV outlook?
Yep. So it's very positive, very strong. Tesla made those deliveries at the expense of margins. So they cut prices 15% at the beginning of the year. But those deliveries show there's still good demand for their products. But honestly, it's a deteriorating fundamental case for Tesla when you're sacrificing margins for unit volume growth. And at the beginning of the year, earnings estimates for the stock were 34% higher, the consensus number was, and revenue numbers were 10% higher. And I don't think those are necessarily too low at this point. So again, the good point, Tesla up 130% year to date. If you look at the stock back, whatever it was, 2 weeks ago, when the Twitter news broke that Ford owners are going to have access to Tesla supercharging stations, the stock went up 6%, which is the entire market cap of Ford, by the way, which is kind of surprising. So I actually think these agreements with Ford and GM might be negative for Tesla. The charging stations were a moat for Tesla. Tesla owners knew that. They had access to those charging stations. And Tesla makes very little money on it. I mean, I think Musk and some others in the company have said 30% gross margins, 10% net margins. But that's really aggressive if you look at a gas station, for example, and I know they're not.
Yep, he's comparing EV charging to a gas station. No. Investors of Tesla don't care about the EV charging. Some people think it's good, some people think it's bad. What I'm here to tell you is people really don't care. Because Tesla's much bigger than a charging network. That's pennies compared to the other businesses. And that's what these analysts really fail to realize is Tesla, sure, if you look at Tesla as a car company alone, then yeah, maybe it is fairly valued. It has 2 to 3 times the profit margins of Ford and GM. Ford can't even make a profitable electric vehicle. GM barely can make a profitable vehicle. If you compare Ford and GM, their electric division, to Tesla, there's literally no comparison, right? But Tesla's beyond that. The robot business, the energy storage business, potential robotaxi business, full self-driving. Cars is one thing that Tesla's doing. Tesla could make phones tomorrow. They could do whatever the hell they want. Tesla's a brand. You think GM could come out and make a phone and have it be successful? Probably not. Just for an example. So when people focus on the pennies here like these analysts do and make a bearish thesis based on things like this or valuation, in which if you look at Tesla, you're not chasing a rally here. The stock's not even at 52-week highs. It should have never been at $100 to begin with. The fears never materialized. Apple, none of these other companies fell to the same degree as Tesla. And again, if you look at the growth rates and factor that in with the PE ratio, Tesla is 2 to 3 times cheaper than a Microsoft or an Apple. And it's worse for stocks like Nvidia. Believe that or not. Nvidia, sure, it's growing by quite a bit. but not to the same consistent degree as Tesla as of right now. So even Nvidia's PEG ratio is at 4. Tesla sits at about 1.5. The only big tech name that is cheaper is Amazon. So I think these analysts have completely lost their marbles, but let's go ahead and continue on with this vehicle for a couple more moments, and then we'll get into the next segment of this video.
I know they're not necessarily comparable, but to me, it feels like exchanging that business like that's going to be the business going forward is like picking up pennies in front of a steamroller. And it just, at some point, the valuation will matter. It's not today. Stock goes higher, at least all things equal, notwithstanding the market. It should be biased higher in the near term on those deliveries, but ultimately it's going to come down to valuation.
See, that valuation argument is not even factually true, again, when you factor in growth. And this is something that I want to highlight for you guys so many times over and over again. I don't care if I sound like I'm beating a dead horse here, because when Tesla stock rallies over $300, $350, I mean, there's one reason for that. Because the valuation has room to increase. Now, if Tesla beats on margins, they bring more money to the bottom line, well, that's also going to lower Tesla's PE. That's going to instantly have a effect of giving Tesla a lower valuation. That's also going to make things a little bit more attractive. Again, if you are a bear and you only look at the car business.
So from superchargers to gigafactories, all kinds of factories all over the place, stiff competition, but a growing demand going forward, most likely. Doug, is Tesla a buy or the other names a buy?
Well, I completely agree with Andrew on that, the valuation's going to matter at some point, and buying it at 75 times forward earnings is really tough. It's a hot stock. You feel like you're chasing this euphoria. And so we would wait for a better entry point. It's definitely a great company, but tough to buy at these levels. It's sort of priced for perfection. And if there's one modicum of bad news comes out, it'll get hit pretty hard from this level.
See, what you should also find funny is that Tesla is the only stock that analysts want to cry about valuation. You don't hear this on a Microsoft, an Apple, Nvidia, and AMD, which all have higher valuations than the Tesla. You don't hear that. Besides on Tesla, it really makes you wonder why. With $26 billion of short positions currently on Tesla, I think that answers the question. Now, they just mumble jumble throughout the rest of this video, so we're going to leave it off here. I do want to get into the next topic of this video, which is China. So what's essentially happened is a bunch of Chinese automakers, as well as Tesla, have come to an agreement to no longer kind of change their prices back and forth, to end this price war with Tesla. And like I said just earlier here in the video a couple moments ago, this was seen as a negative for Tesla from analysts from the beginning. Price war, oh, it's going to be bad news for Tesla. And now they're trying to say this is now bad news for Tesla. Tesla literally can't win with the bears. And again, they continue to value Tesla as only a car company. And that's why they're going to get wiped out. I mean, the bears, the shorts, they're done for if they continue to stick with the same mindset that Tesla is only a car company. And that could happen as soon as this upcoming earnings. Okay, so what's going on here is the Model 3 and the Model Y are less complex in functions and configurations compared to Chinese car brands such as BYD. So it cuts prices to challenge its rivals. Tesla can fix vehicle prices in the US with a market share of over 60%, but not in China, where it holds only about 7%. So NIO, XPeng, BYD, 16 other automakers in China have come to this agreement. Now, this could actually be a positive thing for Tesla, considering even XPeng recently just announced that they're going to be making an $18,000 EV. They're going to be making a $26,000 EV that is comparable to the Tesla Model Y. That doesn't sound like great news for Tesla. If these vehicles get rolled back on and they're not allowed to continue with this price war, like I just said, with these super cheap vehicles that really, I mean, Tesla can't compete with an 18,000 vehicle right now, this could end up being a positive thing for Tesla in China, but the bears again are not going to tell you that. Now, as far as the economic data coming out tomorrow, the non-farm payrolls for June, you're expecting about 225,000 job ads. Today, the markets were red quite a bit. Russell 2000 was down over 2% today. Your small cap stocks got beat up as the markets are now pricing in more rate hikes from the Fed. You're firmly pricing in at least 2 more rate hikes, and now you're not expecting rate cuts until at least March of 2023, and that could get pushed out further if the data tomorrow comes in super hot. Now, the non-farm payrolls, really what you want to see is something in line with expectations. About 200,000 job ads would be a positive. That would be about 25,000 less than consensus forecast, but it's not going to be so low people are fearful about a recession. The data from here on out is really about coming in line with expectations. You don't want to see surprises. We got a surprise today. The ADP employment change showed there was almost 500,000 jobs created last month. Actually, technically, I believe it was for the month of May. Let me double check that here. Or no, for the month of June. So this is a little bit more recent, and you were only expecting 228,000. If the non-farm payrolls come in a little bit below, a little bit above, not going to be a huge thing. Not going to be a huge deal. Markets aren't going to react that much. If it comes in too high or too low, then you got a problem. The unemployment rate for June, you're expecting that to come in at 3.6%. Last month's reading, it came in at 3.7%. Again, the same logic here, but you want the unemployment rate to come in low, preferably. Ultimately, stocks care about a recession more than they care about the Fed raising rates. That's the bottom line. Markets crashed in 2022 because we were thinking the Fed raising rates as aggressively as they did would put us into a recession, and likely a deep one, within the next 6 to 12 months. Well, a lot of people still are bagging on a recession. A lot of people still think that is the most likely outcome. But if the unemployment rate remains low and inflation continues to come down, that's the Goldilocks zone. That's the soft landing narrative. What you don't want to see is unemployment falling, which again is positive, but inflation rising. You want to see unemployment falling or staying low and inflation falling. If inflation were to rise and the unemployment rate continues to fall, that's where you would have a problem. So I think the biggest catalyst tomorrow morning is probably going to be that non-farm payrolls report. Again, if it comes in higher or lower than estimates, but the unemployment rate will also be a big deal for our markets. Again, if it comes in too high or too low, Houston, we have a problem. So that is going to do it for this video. If you learned something, you like my perspective, and you want to stay up to date with all of these videos every time they come out, hit that notification bell, as well as the subscribe button, as well as the like button, because you know it's free 99 to do so. If you guys want to get yourself some Tesla merch, link down below in the description of this video. Get yourself free stock with Webull. Deposit $1, get 15 free stocks, almost free 99. And if you guys want to come trade with me live in real time every time I make a trade on Tesla or any other stock or option or crypto or Forex or anything else, link down below in the description of this video as well for that one. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.